Hello, beautiful people, and welcome to this week's edition of the ITU Forex class. In this week's edition, we're going to be talking about sentiment analysis. So in the previous 2 weeks, we talked about technical analysis. We then followed upon that with fundamental analysis. And lastly, we are now talking about sentiment analysis. Now, forget about the fancy words. All these analysis types are just methods which traders use to determine when is an ideal opportunity in the market presenting itself for them to buy low and sell high, or sell high and buy low, to kind of make profits through speculating in the markets, okay? This does not mean that for you to be a consistently profitable trader, you need to master all three types of analysis. In fact, there are traders who know almost next to nothing about fundamental analysis or sentiment analysis, and they make a good amount of money through trading the markets with only technical analysis. And also there are opposites of that. You might have some traders who exploit sentiment analysis or fundamental analysis, and they have nothing to do with technical analysis. The idea is, when you're first getting started with the market, you first want to understand, have a basic knowledge, have a basic understanding of all three of these analysis types, and then you'd find for yourself which one you resonate more with, and then you delve deep into it and try to master it as best as you can. But also, there are traders out there who tend to marry all three of these methods and, kind of to create their kind of unique style to trading. But when all is said and done, all these methods are designed to do is to just give you an advantage of identifying when there's a high probability of price doing one thing in the market, so that you can take advantage of that repeatable pattern and buy low and sell high, or sell high and buy low, basically profiting from the markets. So with that long-winded introduction out of the way, let's talk about what sentiment analysis is. Sentiment analysis basically gauges the overall mood or attitude of traders in the market. So let me give you an example. Let's assume that we have 100 traders in a room, okay? And let's, just for simplicity's sake, let's say that 100 traders in that room are all of the traders there are in the market, okay? This is just an oversimplification, but to help you get the point. So in this case, and let's assume that those traders are only trading one currency pair, the Euro USD, okay? In this example, those 100 traders in the room, they're only allowed to trade one currency pair. Now, because they are, in this particular example, we're using them as all of the traders in the market. Some of these traders are actually going to go long on the Euro USD, meaning they're going to buy the currency pair. Some of them are actually going to go short on the Euro USD. So basically, if you split them into percentages, let's assume that 70 traders out of those 100 buy the Euro USD, while 30 sell the Euro USD. This is actually going to be represented on a scale which is going to show that 70% of the traders in the market, which in this example is the room with 100 traders, are going long on the Euro USD, and 30% of these traders are going short. When you're using sentiment analysis, this is going to be represented as something like, on a scale like this, where you'd have 70% are going long and 30% are going short. Okay? This is basically telling you the overall position of traders in the market. But with Forex trading, because we're not using a because we're not using a centralized market like the stock markets, for example, getting this data for all of the traders who are involved in the Forex market is kind of difficult. And so the thing that usually happens is that for the giant brokers that we have in the industry, very big brokers like IG markets, IC markets, and all of those other brokers, since they have a large share of the traders who are invested in the market trading with them, then what usually tends to happen is you're going to have these traders, they would have something that is going to show you the distribution of the trading positions that traders take. That's the traders who are actually trading with them. Okay, so if, for example, let's say IC Markets has 1 million clients, 1 million Forex traders, and let's say, a huge chunk of them are trading the Euro USD, they are going to try to aggregate these traders' trading positions and see that, okay, a percentage of these traders are going long on the Euro USD and a percentage of them are going short. Okay. Now, what you do with this information is actually up to you. Because what I mean by what you do with this information is up to you is that most professional traders, they know that the people who are involved in forex trading, like over 90% of the traders who are involved in forex trading, tend to lose money in the markets. And so one of the ways that these traders tend to use this information when they are trading is that when they see like a currency pair, for example, and you have like let's say 80 or 90% of the people who are trading, or even in this case that we're using this example, 70% of the people who are trading, the traders who are trading that particular currency pair, are going long, and the remaining percentage are going short. Because they know that the majority of the traders in the market lose money when they are trading, what they'll do is they'll try to trade contrary to what the majority of traders in the market are doing. This is a contrarian trading approach using sentiment analysis. So if you know what the herd is doing, and because you know that the herd in trading, like over 90% of the traders who are involved in forex trading, lose money when they're trading the markets, then you're going to do the opposite of what they're doing. This is one way that traders tend to use a sentiment analysis to take advantage of the markets. Okay? So in a nutshell, sentiment analysis helps us to identify whether traders are feeling bullish or bearish in the market, which is basically what I told you. Okay? And it also acts as a psychological indication of the market direction. So what this simply means is, if you have a particular currency pair, for example, and you have price making higher highs and higher lows, okay, this is basically telling you that the direction of the trend is bullish. Now, with sentiment analysis, the way you're going to see this is usually with the distribution of the percentage of traders and the position they take in the market. Okay. Now, moving on. Let me quickly clear this and let's move on. Okay. I think let's quickly clear this and move on. So, why does sentiment matters in the forex market? Well, one of the reasons is because market moves are driven by trader behavior and perception. So, if, for example, the majority, or let me not say the majority, because in trading, actually, it's not about what the majority are doing, because you could have the majority of traders in the market doing one thing, but if only a minority of traders are controlling the bigger position in the market, then they are going to lead what price is going to do. Let me put it in simple terms for you. You might have, like we used the earlier example of 100 traders in a room, assuming that that room is the market in this particular example. And let's say 70% of the traders in that room are buying the Euro USD currency pair. You would assume that because 70% of the traders in that room, assuming the room is the market in this example, that since they are buying, that the trend is going to go up. But that's not actually the case, because if those 70% of the traders are only trading a small volume of that particular currency pair, then it's not necessary that they will dictate where the price of that currency pair is going to go. If all those 70 traders, for example, are only trading with maybe 0.1 lots, and maybe the maximum is like 0.10 lots, while the remaining 30 traders who are actually selling the Euro USD are shorting it with maybe 10 lots or 100 lots or all of this, because their positions are much bigger, that is actually going to dictate where the direction of that currency pair is going to move in. So it's in the market, you have to be careful, especially in forex trading. You have to be careful to understand that when you have a majority of traders doing one thing, if they are not controlling the majority of the volume which is being traded in the markets, then it's highly likely that they cannot control or dictate where price is going to go for that particular tradable instrument. Okay. And the second thing is, sentiment analysis explains price movement that fundamentals or technical analysis most of the times cannot. Let me give you an example. You see, on your technical charts, okay, you might have price respecting, higher high or higher lows or market structure or whatever the case might be. And you might have fundamentals, maybe, interest rate cut when the Feds, or for the United States, or the CBN, BOE for Bank of England, or any of those central banks, cutting or increasing interest rates or all of those things. But you'd see that price is doing the opposite of what you would assume that it's supposed to do. So let's assume that the economy of the United States is booming, you would naturally assume that because it is booming, then the United States dollar should be increasing in value in the market. But there are times when you'd see that, yes, the numbers, the employment data, the GDP, all of those other numbers are showing that we have a booming economy. But instead of the currency of that particular country to increase in value in the market, it's actually doing the opposite. It's decreasing in value. When these happen, it's not as if the fundamentals are not there. It's not as if the market is not trying to respect the technicals, but it's just that the traders that are involved in the market is because at the end of the day, it's not the fundamentals or the technicals that causes movement in price action. It's how traders express their belief in what the particular value of that currency you're trading is supposed to be that actually affects that currency. So if the technicals are all showing you that, okay, the price is supposed to do one thing and, it's doing the other thing, and fundamentals are telling you that, okay, because there's a booming economy, the price of this currency pair, the demand for that currency pair is supposed to increase and all of that, but it's doing the opposite. This could be because traders don't actually believe that the demand in that particular currency pair should be the way it is, or the numbers are actually representing what it's really underlying in the markets. And as a result of this, maybe they might be selling that particular currency, and that would cause it to not align with what you think it's supposed to do. So at the end of the day, the only thing that is going to show this to you pop and plain is sentiment analysis. Okay? And one other thing, the last thing is that sentiment analysis helps you to avoid trading against the crowd during extreme sentiment. Let me put it this way. When we talk about extreme sentiment, this is when there's a clear direction, a clear trending direction in the market. You know those type of trends that you'd see in the market where prices, just making higher highs and higher lows and higher highs and higher lows for months on end or for weeks on end, okay? That's a clear one-sided direction in the market because it's almost as if all of the traders, the majority of the traders, obviously not all of them, the majority of the traders who are involved in the market think that, the particular currency pair you're trading should be moving in that direction because of, whatever the case might be. Now, when you're looking at sentiment analysis in such situations, you're going to see a clear one-sided domination. Something like, let's say, the Euro USD has been going bullish or bearish for months, for example. When you look at the sentiment analysis, most times for that particular currency pair, you're going to see something like maybe a 70-30 distribution or 80-20 distribution, where 80% of the traders align with the direction of the trend, and only a small minority disagree with what the other traders are doing in the market, okay? It's only sentiment analysis that is usually going to show that to you with clear numbers there, okay? So what are the tools for measuring sentiment in the market? What do traders use to measure sentiment in the market? Well, one of those tools is the Commitment of Traders report. The COT, as it is commonly called, is a report which is published by the Bureau of Statistics for the United States every week, if I'm not mistaken, every week. This Commitment of Traders report usually shows the distribution of traders in the market and how much of traders or how many traders are long or short on a particular tradable instrument, okay? Some traders use this information to see when institutional traders are heavy on any tradable instrument, like, for example, for gold or, a particular currency and all of that, okay? Some traders think about consider the Commitment of Traders report as a leading indicator, because most times before you have those sharp turnarounds or reversal in the market of a trend, you're going to actually see it reflected in the Commitment of Traders report. Okay. So next up, we've got the forex sentiment indicators, like the one I told you earlier on, the one from IG Markets. The IG Market is one of the biggest brokers in the forex trading industry, okay? So they have a tool which usually shows the distribution of traders who are trading with them, how many percent of them are long or short on a currency pair and all of those things, okay? So usually they tend to publish this type of data, okay? And there's also news headlines and volumes and open interest on some platforms and all of those things. Now, let's look at the example of the trader sentiments from some of the biggest brokers in the industry or some of the biggest forex trading providers, okay? If you've been attending any of the forex ITU forex classes, you pretty much know that one of the websites that have tools that I usually recommend to traders is my FX book. And here you can see that they actually have a market sentiment tool, a market sentiment indicator, which some websites can even just come and copy and add onto their websites, okay? But we're not going to be doing that. We're just going to be using it directly on their site. So this was what I was telling you earlier on. You see, they have a community of traders. If you remember, we use, tools that they provide, like the position size calculator, like the what other tools do? Their what do you call it? Their trading journal service, and all of those tools that they provide for free. Okay, and because of that, they have a lot of data about the positions and that traders are holding in the market. So from the traders in their community, they have this. They are privileged to see how many traders are long on a particular currency pair or short on it, and what volumes, how many lots they're actually cumulatively trading, and all of those things, okay, and how many positions. Now, you can see that this is a list of currency pairs that they are providing the sentiment analysis for, the sentiment for. Okay, we are doing sentiment analysis, but this is actually the sentiment. So here, let's use the Euro USD, which we used as an example. You can see that here it's showing you that the symbol here, that's for the traders in their community, the symbol Euro USD, and you can see that 62% of the traders in their community are actually going short on the Euro USD, and 38% of these traders are going long on it. Now, knowing this percentage is one thing, but also having the stats behind it showing you that, okay, this is the cumulative volume that these traders are trading, is actually also a very good information that you would want to have, because this is telling us that over 10,000 lots, the people who are short on the Euro USD in their community are actually shorting it with over 10,000 lots. That's a lot. That's a lot of people, okay? And that's probably going to cause some movements in the market. Now, to even make it easier for us to see, let me quickly open up a chart of the Euro USD and see what it's actually showing us, okay? As you can see, this is actually the daily time frame of the Euro USD currency pair. And as you can see, what we have on the charts here is that the Euro USD is, if we're using based on market structure and moving averages and all of that, you can see that it's in a clear uptrend. The reason is because if we're using only moving averages to determine the direction of the trend, you can see that the fast moving average has crossed above the slow moving average, and it's staying far away from it. So this is showing us that price is above the moving average, and the moving average, the first one, is above the slow one. So we're basically in an uptrending market. And not only that, if we're using market structure to determine how to identify our trends, you can see that this particular Euro USD currency pair, the daily time frame of it, has been moving in a downtrending market, have been making downtrending market structure, because price has been forming lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs. But all of a sudden, since the moment that price broke above this particular currency pair's lower high, it has started forming higher highs and higher lows, and you can see up until this moment, we're struggling to break this previous high, but price has been consistently forming higher highs and higher lows. So what does this have to do with anything? Well, if we go back to our sentiment indicator here, which is provided by my FX book, you can see that the majority of traders are actually shorting the Euro USD. But you remember I told you that there's a way that professional traders tend to use the sentiment indicator as a contrarian trading tool, meaning they use it in such a way that the majority of traders might be doing one thing, and then because they know that the majority of traders in the market are losing money, then they're going to do the opposite of what those majority of traders are doing. So most times what you're going to see is that when you're using these sentiment tools, you're going to see that the market might be in a clear uptrend, but then traders will be trying to catch tops and then trying to catch the reversal, and then they'll be selling and selling and selling, and the majority of traders might be selling when the market is in a clear uptrend. It's doing the complete opposite of what the market is doing. And so some traders tend to use this information to their advantage. So when they see that the majority of traders in the market, like it's a one-sided thing, then they're going to do the opposite, because they know that most traders, when they're doing one thing, they are the losing majority, and so they will do the opposite. And this is clear for us to see, because on this chart you can see that the Euro USD here is actually in a downtrend. According to what we have from the community of traders here, it's supposed to be in a downtrend because the majority of traders are selling. But when we look at the chart, we'll see that that's actually the complete opposite of what is happening, because the market is clearly in an uptrend, and it still hasn't shown us reversal signals that price is going to move in a downtrend. And let's use another example here. Let's go back to the indicator. Let's go back to the sentiment indicator here. And you can see something like this, the AUD JPY. You can see clearly that only 25% of traders who are trading in this particular community, who are trading with the AUD JPY currency pair, only 25% of them are shorting it. And the majority, 75% of the majority of traders who are trading this pair are actually going long. So because of this, we would assume that because of this, the direction of the trend on the AUD JPY should be bullish, right? Now let's open the charts and see, okay? Because I'm going to be as surprised as you are, okay? Again, you can see this is the exact opposite of what we would have expected in the markets, okay? Because we are seeing that the AUD JPY, 25% of the traders on it are actually shorting it. So they are the minority. And the majority, 75% of traders, are actually going long on this currency pair. But when you look at this pair, you can see that if we're using moving averages to determine the direction of the trend, we have the black moving average, which is the faster moving average. It has already crossed below the slow moving average, which is the slower one. So based on moving average directions, you can see that actually this particular currency pair is in a downtrend. And if we're using market structure to determine the direction of the trend, you can see that price has been making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs on this particular currency pair for a long time. So after we had this very huge drop, now price is, maybe correcting, but, it's basically trying to continue moving in the downtrend direction. But this is still subject to, a little bit of waiting, because if price was to break above this previous resistance, this lower high, then it might start to, because since it failed to break below this support level, then this might be the sign of a beginning of a new trend, maybe to the upside. But at the moment, price is finding it really, really difficult to do that. So again, this is one method. This is one strategy you could use either in conjunction with the other technical analysis strategies that you use, or just to kind of filter, just gauge the sentiment in the market. Because when the majority of traders are doing one thing, we know that the majority of traders who are trading in the forex market don't know what they're doing. More often than not, they actually lose money in the markets because they are doing what the winning minority are doing the opposite of. And so you can use this to your advantage. So again, going back to the sentiment tool, this is one way that traders use it. They tend to come here, and find currencies which are clearly one-sided. Again, let's check for another example. This is the AUD NZD. Just to make it easy for us to have a look at, let me quickly do this. Let me add AUD NZD to my watch list. AUD NZD, where is it? It's right here. And after adding it to my watch list, I'm going to drag it and drop it on my charts. And then we're going to look at what it's actually showing us on the market. So when we go back to the tool, based on what we have here, the AUD NZD, only 11% of traders are shorting it. And 89% of traders are going long. So we would assume that because of this, the direction of the trend, since the majority of traders in the market are actually going long, you would assume that the direction of the trend for this particular currency pair should be bullish. But as you can see, yet again, you can see that this is the daily time frame of the pair, but it's in a clear downtrend. Because moving averages have crossed, the fast moving average has crossed below the slow one, and this is showing us that we're in a downtrend. And not only that, when if you're using market structure to determine what the direction of the trend is, you can see that this particular currency pair is making lower lows and lower highs, lower lows and lower highs. Okay, so this is one way that traders use this particular tool. Okay, among the various methods that you could use it for. So if you're interested in it, go out there, try it out, check out of all of the tools that are out there, check the tools that you resonate with, and try to come up with a little bit of idea or practice it, so that you can see these things for a fact for yourself. And if you're interested in adding technical analysis, sentiment analysis, along with other tools that are going to help you to become a consistently profitable trader, learn a little bit more about it. Watch YouTube videos, other YouTube videos who are going to show you, break it down and help you to form a strategy with it, create a trading plan around it, and all of those things, okay? Now, with that out of the way, again, this pretty much brings us to the end of this class. And I would like to use this opportunity to introduce you guys to our suite of trading bots, which are offered by the company, which are designed to help you earn while you're learning, okay? So these bots are usually going to scan the markets, look for low risk, high probability trading opportunities for you, and open and close trades for you based on with proper risk management and all of that. Okay, if you're interested in it, please leave a comment in the comment section, and we'll be more than glad to help you set everything up and walk you step by step to setting it up and taking advantage of it. So with that out of the way, I look forward to seeing you guys in next week's edition of the IT Forex class. And thank you very much. God bless you all. Have a wonderful rest of your day. Cheers.